All right. Welcome everybody. Sorry about that. Was trying to get the live chat set up for TikTok. Yes, I read live chats. And I do want to apologize to anybody. I didn't realize that my live chats were not working for TikTok the other night or the last few nights. And so I do apologize that I missed you. And there's something developing here that I do want to talk about real quick before we get into anything else. There's a possibility of closing above this area or these highs right here. And if we were to, sorry, TikTok, I got you on the wrong. You're not updating. There we go. And so these highs, let's see here. Can TikTok see? Sorry, guys. Give me just a second. Let me fix my charts here. There we go. Okay. And so if we come back here, it's going to be difficult to see that. Let me bring this over. Can you see that? And how well can you see it? There we go. When we look at these highs, all right, we break through this high and close above it. That creates a range extension. And if we have a range extension, we should be anticipating trend continuation, not a reversal. And in this context, that would be a market shift. Okay. Trading a balance, looking for rotation. Come up, we close above that high. Now we're looking for an imbalanced market condition higher and a continuation move to the upside, which would be a trend. Trading a trend is very different than trading balance. Two different market conditions. And if we don't recognize those two shifts in the moment, we're going to be trying to trade a market condition that we're unable to, or against. We're trying to trade a market condition against what the market is doing. Recognize the trend, trade a trend, right? An imbalanced market condition. Recognize a balanced condition, trade the range, all right? And so this is very important and a key moment in this market right now. That's why I wanted to come in a little bit early tonight and explain that to everybody. There's a market shift possibly happening right now, so be careful. Trade according to your plan and how you trade either a trend or reversals. And up here, instead of trying to get in and calling a reversal, especially off of a candle reversal bar, make sure you have some confirmation before you're starting to look for the downside, especially knowing that we are coming off of exploratory all-time highs off of our daily chart. And if we look here, where is my daily chart at? Sorry. I'm trying to get everything set up for TikTok so everybody can see the charts and we're good to go. When we look at this market condition on the daily chart, we've been in a trend for a long time. Not only have we been in the trend for a long time, we're trading in a range now. And now that we're in this range and trading in a balanced condition, what is the market going to do? Come down and trade back into value, or is it going to break up and trend higher? And when we're looking at the short-term charts, we're in that market condition shift right now and a possibility for a trend condition higher. So just be careful trying to short the highs. Little announcement for everybody to try to keep them out of trouble. Doesn't mean that we're not going to short. It just means that right now we're in a market shift condition. Be careful. All right. And if you guys have any questions, comments, you want to talk about something, bring it up. Just say hi in the chat. I'm a pretty personable individual. Been around the world, let's have a conversation. If you see something in the charts, let me know. That's what this is all about. Learning, growing into trading in this industry we call it trading. And being able to recognize the development that it takes to do it, right? None of us are perfect traders. We all have bad days. Go back and look at my video last night. It was terrible, right? Trading the Asian session for the first time in a long time, in the NQ, in a market that, wasn't my top market to trade when I was trading full time. And then you add that into the stream at the same time of live with individuals. Yeah, I completely misread the market condition last night, completely misread the market. And then what happened today? Well, I turned around and traded the morning session, 89.75 points. There you go. We come back. We come back as long as we don't mess ourselves up psychologically, where we are unable to get back up again. That's the key. Being able to get back up in times of adversity, and not get back up triggered, where now we're trying to revenge trade and do all the crazy stuff. Come back to the present moment. Come back into the moment where you are present, where you're able to consciously take action in the markets based off of what you see, not what your subconscious processes see. Perception. And perception runs off of two things: subconscious and conscious intention. Subconscious intention works off of patterns. Most of us don't even know what our subconscious even intends or what its destination is, because most of the time it's so busy trying to move us away from what we don't want that we don't have time to act, or the ability to act on our conscious intention to bring it into a manifestation into the physical world, right? And so if we can reconnect to the present moment and be here in this moment, ready to trade, not because we're upset, not because we are trying to revenge trade, or we're trying to get back money, or we're worried about possible continuing losses, or we have to make revenue, or maybe we're about ready to blow up an account. That stuff is the past. Come back to the present moment, be present. Allow that stuff to be separated. Allow yourself to separate from those things so you can view the markets through conscious perception. And if you can do that, you're already way ahead of the game. And if you can do that in life, you're way ahead of the game. So we're looking at a possible market shift and into an imbalanced market condition higher. And we're probably going to end up trading direction of trend tonight. If this price action moves, you guys see this on TikTok? Let me bring this down a little bit for you. If this price action were to move down from current price below this little low volume node where rejection has taken place before, I could see a potential retrace back up, rejection, and a continuation down move, possibly into VPOC at 320, maybe even value area low at 960. Would I expect the 960 to happen in one session? No, that would be more of a swing trade, but you could definitely target in that context, even value area high, VPOC, or VWAP. And so there we go. That would be the context of the short side. But again, only if we get confirmation to the short. We don't want to try to call a top, especially when the daily chart is currently balanced, but an imbalanced market condition in exploratory highs. And what are exploratory highs? It's just a lingo from auction market theory telling us all-time highs. I'm a dinosaur, right? I've been trading for a while, so I speak in a little bit of a different language than some of the others out there. Not better, it's just different. Any questions? I guess Chartmaster has a 99% sure signal for us. We should probably, invest the house, the $100,000 into that, because that'd be a good investment. I like it. Good call, Chartmaster. Appreciate you for coming in and saying that. All right. I'm not going to be trading until about 8, but what I'm going to do right now is go on to the higher time frame charts and build my trading plan. So anybody interested in seeing how a trading plan is built in auction market theory, please definitely come on in. And as I'm building the plan, if you have questions, let me know in the chat, and we will definitely discuss and get your questions answered as best of my ability. All right. Let me fix this so you guys can see it. And there we go. All right. So what's going on in the mid time frames, right? We already know that the daily is an imbalanced market condition with developing value, right? Trading at value area high near all-time highs, moving possibly into exploratory highs. What happened today in the market session? What we did today was very interesting. I had a really good day in the US session, and you'll be able to see my chart on my trades here momentarily of what I did in the US session. Did I go back too far? My trades at, there we go. Our opening range was very tight, very tight. And we tested outside of the range right at the open, and we ended up closing above. And what happens when we close above the outer range of opening, of the opening range of fair value? Tells us that buyers are a bit committed. Market turned around and sold off. All right, we already know we're trading in a range, we're in value, we're trading in a balanced market condition. So we should expect, if a range is extended, that the lows are going to be tested. Why? Because you're going to see buyers once defended that area, and unless we're going to move into a trending market condition, we're going to go back and we're going to test where buyers once were. And that's exactly what happened here. Market came down, retested opening range low, rejected, closed back inside of the range, retested again without making a lower low, retested in a low volume range where we're expecting possible rejection from low volume, an area that has rejected previously, moved us back into the opening range high. Now, I had other things I had to do today, so I had to stop trading here, and I did not pick this portion, this move up. However, you go to the shorter time frame charts, the entry is absolutely 100% right there. Easy trade to pick up. I just wasn't here to do it. Not that I missed it, just wasn't here. Where did price action go? Well, price action went up, of course, into the highs. But what is that high that's representing there? That high that's being represented is right up here at value area high. We already knew where the market had a good chance of going to today. We didn't know exactly where it was going to go, but we can say with high probabilities that this market goes up because of the balanced condition on the daily chart. We could be moving up here into value area high at 547. Okay, market went up a little bit higher than that. That's a good target range for understanding where the market can possibly go. For those of you that don't really necessarily want to scalp, you want to look for bigger ranges, these areas of value can tell you where you're anticipating market to go. Why? Because value area high, value area low, what is representing? 70 to 80% of where trades have traded within this little range. So from here to here, this range, 70% of price is traded within these two green lines. Value area high, value area low. Okay. With VPOC, volume point of control, where most trades have been taken in this range, was here. And that VPOC was developed in a single day. And that was a couple days ago when the market was just absolutely ranging, right? We were stuck in a range pretty much all day, very tight. Everybody's like, oh, this is choppy. This is very hard to trade. How do you trade a range? Bring up your value area and trade value area high, value area low, expecting the market to cycle between the two, understanding rejection and price action, understanding order flow to be able to confirm rejection, and then enter in the opposite direction of the previous move. Okay, you can see it here. It cycles, comes off value area high, rejects, moves down into value area low, rejects again, where? Right off this edge of this low volume node, straight back up again. Now you'd say, oh, well, we're going to continue the range. That's where we go into the short-term charts and say, not right now, because we have a chance to move back into a trend right now. Let's be careful on the shorts. Instead of just trying to short a high and calling a high and trying to catch a falling knife, let's turn around and wait for the market to give us confirmation that it's going to be time to short. And that's, where we're going to be tonight, is trading between those two areas. And so then the market turned around and did its thing for the rest of the day. came down a little bit, traded sideways, and then we turned around and created the other range extension, into the market close and now into the Asian session. And in the Asian session, what are we doing? We're turning around and creating higher highs, higher lows, showing signs of buyers still committed to the market. And when buyers are committed to the markets, what we don't want to do is try to call a top and call a reversal. Because in balanced trading, it's very difficult sometimes to understand, are we in a balanced condition? Are we trading a value? Or are we trading in a trend? If you can't pick up the difference between the two and those market shifts in real time, you're going to end up trying to short or buy highs or lows, and the market's going to extend. And then you're going to think, oh, well, that's a trend now. Now you're going to try to get into the trend extension, but you don't have confirmation that it's a trend extension. And now it reverses, fails the breakout, and now you have a move back into value again. Now you've already been chopped up, either hit your max losses for the day, possibly blowing up your account, or you're just too gun shy to click the button and recommit yourself to another trade. And that's where psychologically we take ourselves outside of the out of the market and out of the game, not because we are incapable of playing the game, but because the way that we're able to read the market doesn't pick up the market context of the market shifts. It's the hardest thing in trading to do. Why people do really well when the market's trending and they're like, oh yeah, green shoots, doing great. Then all of a sudden we come into a range, call it choppy, and like, man, I'm getting chopped up. I can't do this, because you're trying to trade a trend in the context of that chop. It doesn't work. I proved that last night. I'm trying to trade the Asian session the same way that I trade the New York session. Can't do the two things at the same time. I'm developing here as well. The only difference is I'm developing it here in front of everybody instead of, on my own. But I wouldn't change this for the world. I asked for this, and this is great. So what is my plan for tonight? My plan is right now to sit on my hands until the market either tells me that we're turning around and rejecting the highs and moving back into potential balance, or that price action is starting a trend and a breakout, and then we're going to do a trend continuation. And so great night for learning, for chatting, for talking, and my mic is not tightening, but whatever. And yeah, we'll see what happens. Hopefully we get some action. Hopefully we turn around and break out of the highs, and we can do some imbalanced market condition trading, some trend trading. If not, then we'll look and see if we can't get a setup for a possible short, fade the trend, and move back into lower value areas. Any questions? Anybody have any questions of what I just talked about? Anybody absolutely confused? Anybody know anything about auction market theory and trading ranges and value and trends and everything else that I'm talking about? Or did I just absolutely 100% confuse everybody? Anybody out there? And in the context of timing into the trades, right? I have this up too. This is my order flow part, and there are numbers there. I just can't blow it up for you guys right now. But clicking into the purple app or YouTube for the large screen, you're going to have access to this. And you're going to be able to see everything that it is that I am doing right now in this context through that app. I can't do it on TikTok because there's just not enough room. But this is order flow, and we will be discussing order flow and what's happening with that. Areas of rejection, areas of acceptance, high volume, not breaking lows. What does that mean? Range extensions to the upside, rejection. How do we read it? How do we understand it? How do we interpret it? So when we go into price action, we can turn around and say, okay, that's what this bar is doing. Now, do I want to participate in the market or not? Rather than just looking at a candle and saying, oh, wow, look, there's wicks. What do I do? Or looking at it and saying, oh, it's choppy. I don't know what to do. And so that's what this channel is all about. How do we keep ourselves out of trouble? How do we stop calling the market top? And how do we trade around that area of balance? This mic is going to drive me crazy if I don't get it fixed. My OCD kicking me in the head again. There. All right, I won. All right. Any questions? Any comments? Any concerns? And we're just going to sit here and chill until 8 o'clock and see what happens. If anybody has any questions about auction market theory or wants to see, what I mean about developing auctions or value area highs, value area lows, how to draw them, how to interpret them, we can go back through back data right now and take a look. I mean, that'd be kind of cool, actually. Maybe I should just go ahead and do that. I do a lot of multiple time frame analysis. I'll look at a daily chart, usually a 4-hour, a 60-minute, 90-minute, but the time frames doesn't really matter. All that time is a filter for the chart. That's all it is. All that time does is allow us to see sequences of price data through a different lens. Think of it like a camera, right? If you want a close-up shot of something, you want to use a specific lens for that. If you want a far away panoramic, you want a specific lens for that. That's all it is. Time frames are just a lens. And what time frame you use is just to get the field of vision that you need. What do I mean? Look at this 2-minute chart right here, okay? We can only see price action from 6:30 tonight until now, okay? But I can see this whole big picture in this chart here on the 30-minute, right? See a lot more price action. I can turn around and bring this to a 240-minute, and we'll see a lot more data. All we're using timeframes for is to line up the data that we're looking for. That's it. It really is that simple. And so people are like, oh yeah, well, you need to look at a 1440 and a daily and a 4-hour and a 90-minute and a 60-minute, and these are all timeframes that are important. What's important is not to overload us with information as traders. We have an overload of information as it is. What is the biggest problem in trading? The biggest problem in trading is not finding entries. The biggest problem in trading is realizing that every single tick provides an opportunity of an entry. Every single tick. The problem is we never know what the next tick is going to be. We never know if the next tick is going to be up or the next tick is going to be down. We just don't know. And so we need to limit the amount of opportunities that we have in a world of complete unknown. And what triggers the subconscious patterns of the human mind more than anything else? The unknown. The unknown. Why? Because we normally fear the unknown, because it's in our genes to fear what's going to happen next. It came to us when we were back living in caves and the saber-toothed tiger was attacking us, right? You fear the unknown. If you hear something and you don't know what it is, you immediately respond with fight or flight. Markets are the same thing, except for every single tick is an unknown. You don't know. And so it triggers the subconscious mind like nothing else. That's the main reason why it's so difficult to learn to trade. It's not because trading is difficult, it's because the subconscious mind, our makeup of as human beings, is not consistent or congruent with this environment, because this environment is a complete unknown. This is why trading psychology is more important than anything else, but it's not about a mindset shift. It's not about anything along those lines. It's about separating from subconscious processes so we can stop the patterns from triggering action before conscious intention comes online. Let me repeat that. Psychology of trading, or psychology of creating an intention in life, doing what you want to do, should always be about how to separate from subconscious patterns so conscious intention can come online and activate action before subconscious processes trigger action. And why does conscious intention need to come online? because subconscious processes always trigger action before conscious intention can come online. And so if we are trapped in subconscious patterns because we are fearing the unknown in trading, our perception will always be linked directly to subconscious processes. This is why you'll see something in the charts and then later on you're like, oh, well, why did I do that? Because your perception is controlled by subconscious processes linked to the fear of the unknown. And unless you can separate from those subconscious processes, you can't change your habits. You can't change the subconscious. You can't change it. How do we know? Neuroscience tells us that it's all linked to neuroplasticity. Neuroplasticity wires can lose. We can lose power, right? But they're never gone. Therefore, your subconscious patterns and habits can never be gone. They will always be there. I liken it to addiction. An individual could have 30 years of sobriety and then one day lose it. Well, how can practicing habits for 30 years not completely erase or change an old habit? Because the old habit is always there. And once it's triggered, it will always trigger action before conscious attention can come online and trigger action for itself. This is why we don't go to the gym when we say we're going to go to the gym. We don't do the other things that we say that we're going to do. Not because we're not capable, because our patterns are creating perception for us that acts not towards our intention, but towards whatever it is that they're going to create. And then we create those patterns and wonder why our life doesn't change. So how do we change our trading? How do we get better in our trading? We start with separating for the subconscious patterns so we can read and see the charts in a new way. All right. Now, these areas have already been pre-built. These areas need to be deleted because value area shifted since they were drawn. Here we have the opening range of low of today. Oh, this is opening range of another day because today's would have been up there. I'll delete that too. And these are all connected to the low volume nodes. And look what happens when price action comes into low volume nodes. There's another one right there that picked that up. There's another one here. That's a high volume node, but then price action came up, broke through the low volume node, giving you confirmation of rejection. It just didn't come back and test that area of rejection. But that's what price action does. Rotates from value area high, value area low, value area high, nearly value area low, which probably was value area low at the time that this was drawn. Go back to it and see. Yep, see? On that bar directly to value area low. And then what happens? Goes up to value area high, creates a range extension. Now everybody is turning around and saying, oh, trend, trying to buy this. Market comes right back into value area high, tries to break again, and turns around and creates value area low. Everybody's like, oh, well, this is a choppy market condition. This isn't tradable. Okay. Or I get chopped up in trends or in value when it's ranging because I can't trade this as a trend because you're trading a value. Marco, are you still here? Welcome. This is amazing. How long have you been trading, and how long have you and what are you looking at in your own trading? What brought you into trading, and what are you interested in? A lot of people are interested in technical analysis and those type of things. Guys, I can talk to you about any of that stuff. I took my first trade in '98, right? I had market data coming in from a satellite dish that I connected to my parents' roof through a coaxial cable, like cable television cable, and was plugged into the printer port and the computer that I had in my parents' garage that I made an office out of. I was 20 years old. Trading off of 2 monitors off of Windows 97. I've been around for a while. You want to talk about MACDs and moving average crossovers and Keltner channels, stochastics. throw them at me and let me know, what technical indicators you're looking at and what brought you into trading, and let's see if I can help get you on the right course. As I've done so many back tests in my life, so many back tests trying to figure out the group of indicators that would create the signal that would just allow me to turn my computer into an ATM. I was trying to do that from 97 using TradeStation 4.0, trying to code in easy language, which is the type of coding that was used in TradeStation at the time. I'm laughing because I've been around, I've been there. I don't have indicators on my charts anymore because I actually learned how to read market conditions, shifts in market conditions, and I learned how to trade the two conditions that actually exist in the market. And they're not chop, sideways, and trend. Okay? They're value and imbalance. You're either trading balanced or imbalanced market conditions. You're either trading in value or you're breaking out and you're trading in a trend. Those are the only two. The key is to understand the shift between the two. And if you can recognize the shift as it's happening real time, you can adjust your trading strategy and your style from momentum, more of a value rejection based trading plan. And you have two plans and you work them depending on what the market is doing. And if you can learn to do that, you can stay in this game. And if you can stay in this game, you can be a long-term profitable trader. But this is why people, when market conditions shift, they end up blowing up accounts. Why? Because they're one-trick ponies. And that's not saying that there's anything wrong with them or there's anything bad about their trading. They're good traders in a particular market condition. Do you want to be really good at a position, or do you want to be the best that could play multiple positions? And what's the difference between the two? Kobe Bryant, basketball player, is really good as a guard, but you've got King James, LeBron James, right? Play multiple positions. And look how long he played the game comparatively to anybody else. Michael Jordan, same thing. And I'm a Kobe fan. I'm a Laker fan, right? I absolutely do not. I have no love for LeBron James at all. But he is one of the best. And he can do multiple things that a lot of people can't do. And if you want to be good at trading, it's like becoming a professional athlete. There's only a few of them. And only a few traders get to that point. But if you want to be really good and last for a long time as a trader, you're going to have to become a superstar. You're going to have to become a Hall of Famer, because that's how many good, consistent traders are out there. About as many people that are in the Hall of Fame or superstars in almost any sport out there. It's tough. It's really, really hard, because what's being taught out there, most of it is not aligned to what it takes to be a really good trader. And I don't have a course. I don't have anything along those lines. I'm just here to answer questions and help in any way that I possibly can. I don't have a course. I don't have mentorships. There's no fees. I'm actually in the middle of writing a book right now. It's about 100,000 words on auction market theory, trying to break everything down and make it simple. Why? Because auction market theory gives you a way to be able to interpret market conditions at the live edge of the market. That's why I use it, and that's why I trade it. It is my indicator. It is my technical analysis. I don't use any other indicator other than that. There's a cumulative delta down here. Yeah, absolutely. I don't trade off of it. I don't look for rejection or anything else along those lines. I have it there for a specific, clear purpose. And then I have price. And then I have my value areas. I have my volume profile, my developing value areas that I draw on my own. And I know how to draw those and where to draw them and why I'm drawing them there. So it's all consistent. And yeah, that's what I do. And that's why my charts look the way that they do. And so we go back on this chart. And so yeah, Marco, if you're still here, you know, and definitely please talk to me. Tell me where you're at in your trading journey and what's going on. But if you try to, let's stop doing that because of this. Duck. My chart's not scrolling. Let me, I want to close it and try to create a new one. Do this. See if this helps. That is so weird. I don't know why it's locked. And it's not scrolling back. This chart's scrolling back just fine. So you know what? Let's just go ahead and put 30-minute up on this one. That's so weird. Anyways, all right. So what happens in price action? You know, what actually happens? We move higher, move into an area of value. We break out of the area of value. We can move back into the area of value. We could break out again and move into a trading condition, creating value, moving into a trading condition, trading of value, moving into a trading condition, value, trend, value. But in these little micro trends, they're trading a value, right? So when you're saying understanding technicals, Marco, what do you mean? What technicals are you trying to understand? You're saying I don't like to see much at indicators, but you'd like to understand technicals. What are the fundamental technicals for you? Of course, fundamental data, of course, is news, right? But if we're looking at charts and price, that means we're looking at technicals. Well, what technicals are you looking at? Just curious. And so price action trades from these imbalanced market conditions back into value, and then trends can, what can look like trends is actually still in value, right? And let's stay here. If you bought, you're happy. Why are you happy? Because you're trading in a trend, right? But what is actually price action doing? It's not trading in a trend. It's coming right back in to value. And if you try to trade any of these pullbacks as trends, you're going to get chopped up because price action is rotating back into value area low from value area high. And there's sequences to be able to see and understand what the market is in balance. Imbalance meaning trending and moving back into a context of balance, which means it's trading a value. What's value? A range. What is another name for it? Because individuals all the time, the market's choppy. I lost money today. The market's choppy. You don't fundamentally understand the market condition that you're facing. And if you don't understand the market condition you're facing, how are you going to trade something you don't understand? And you're going to try to understand it based off of your current understanding, but your current understanding doesn't understand it. It's an oxymoron. You can't have both. And this is why most individuals stay as developing traders and get out of the industry, because they're unequipped to be able to understand what's happening in front of them so they can shift based upon what it's actually doing, not what they're perceiving it's doing. And the perception is always coming from the subconscious processes. I hope that makes sense to everybody. And so what's happening now? We're still trading in this area of value. Let me get rid of all these lines. This market, this chart has too much stuff going on. I don't use this chart very often. There we go. This is how my charts look like when they're completely clean. And all I do is I just come in and I put on, did I adjust this? I don't think so. Well, I didn't line it, you know. So, yeah, I did. Okay. Let me change this because it'll be easier to see if I do. Let's do that it. Let's do the next config and see. Configuration, let's do 3. There we go. That's the one we're going to use because I think that's the one that's going to be the easiest for everybody to see. And let's get the extending. Let's do 1, click on it, click configuration, configuration 3. There we go. Beautiful. So when I come in and I start looking at my charts, the first thing I want to do is, I'm going to have to change that as a default. The first thing we want to do is find the market condition that we're trading in. We already know that we're trading at value. And then we want to look at our value area high, our value area low, and determine where our areas are of interest. Just like every tick is not an opportunity, every area should not be something that we should be interested in. These low volume nodes here should be areas of interest for us. Because if we're trading in value and the market is trading around value, we want to understand where price has the highest probability of rejecting from. Because if we're trading balance, we want to sell rejection at the value area high or around value area high, buy rejection around value area low. And that's what allows us to get in and trade around these areas of previous rejection. And in here, this is where price action has traded around the most in between these two green lines, this line and this line. So what we want to do is not pick up the areas of rejection in value. We want to pick up the areas of rejection below value area low and above value area high. Now we can understand where rejection is taking place, where we can return value. And when we look at this, we rejected from this low volume node right around value area high here, and we didn't even get back into value area low again. What does that mean? That means that price action rejected at higher prices in value, telling us that there's a potential move higher. When that occurs, we want to wait and see what happens at the highs rather than trying to turn around and buy in these areas, and rather than trying to sell this rejection. The market is telling us that it would be doing something else. Why trade value and anticipate movement back into value and balance trades when the market is telling us that it's doing something different? That's all price is doing, is it's giving us a language to read. But if we can't read the language it's giving us, we're going to have a very difficult time deciphering. If you can't read kanji, then is it going to be helpful if I give you a book that's written in Japanese? Same thing with Spanish. Same thing with any language. And the price action is a particular language. Auction market theory is about reading the language of the market. Just like accounting is the language of business. Auction market theory is the language of price action. That's why I follow it, and that's why I try to help other people understand it. And there it is. I mean, look, rejection. What happens? Sideways price action right below value area low. Comes back in, tests the lows, rejects. And where does it go to? Back into value. Same thing here. Look, we didn't get back into value area high. We didn't cycle. Price action comes down. Lows is below these lows. That's the first sign right there of potential change in market condition. The language of the markets now is telling us that the market condition here could be changing and be looking to go lower. I shorted here. I shorted in this area, anticipating a possible move down. It didn't happen. I bought this area, so I shorted in here, took a loss, took an expense, and then I bought back in here again. Why? Because market action did not, or price action, the language of the market told me that this moving back into this area is not trend, is not trend directional language. Why? Because we made a higher high. Lower highs, lower lows is a trend. All right. And so we just broke a high right after confirming a possible range extension to the downside. This becomes range extension failure, anticipation of movement back into value. What happened? We moved straight directly back into value, back up into VPOC, back up into value area high. And these market shifts, they're going to get you sometimes. These are where we take expenses. Every single business takes expenses. And if you don't treat trading as a business, you're not going to be in the business for long. This isn't about gambling. This isn't about being right. This isn't about turning a computer into an ATM. It's about learning how to read a language so you can become consistently profitable and you earn the title and the right of a trader. No different than as myself earned the title of a Marine. Didn't do it because I was given the title. I did it because I passed boot camp. Here, learning the language of the markets is your boot camp. And if you can pass it, you're going to know what the market is doing, regardless of what it's doing. And there's not going to be any question. There's not going to be any unknown. And when it's time to act, you're going to know what to do. And you're not going to hesitate. You're not going to think about it because you trust yourself, because you trust your analysis of the markets, because it's not based on some mathematical indicator. It's based on the language that the market is telling you it's speaking right now. And you're going to be able to speak the different languages the market speaks, trends and ranges. And you're going to know exactly how to trade the two. And it's beautiful because right now we're in a possible market shift, moving into a possible range extension, just like we did here. The difference is where this is counter trend to the daily chart. This is going in the direction of the daily chart, which means that we have a higher probability of creating a range extension up here and having a possible trade, a ranged or a trend trade night, which is going to be a lot of fun. Trading trends are always fun because they just go, and it's just like a profit machine. But if you can't catch it, you can't grab the profits. Well, there we go. I'm not necessarily biased to the upside tonight. Just the language of the markets is telling me that, ability speaking, that's the direction it's going to go. Not from a bias, because I'm just as ready to go short. Where would I go short in this market? I would want this price action to come down in here, close below this area, close below here, pull back into this area, and now I'm ready to go short back into VPOC, back into VWAP, volume weighted average price, and then down to possibly into value area low. Would I expect it to go down to 29,000 tonight? No, but could it? 100%. Because when you look at the daily chart, what I have on the daily chart here is not volume. This is your average daily range. What is your average daily range telling you? What the average price is of each one of these bars, the range of the bar itself. And this line here is telling us what the average of the bars have been for the last 5 days. Now we know what the average is for the last week, right? Look at these bars. 600 points, 600 points, 600 points. We've barely even moved 100 points tonight. So 400 points would only put us at 500. We'd be right here at this range. We could absolutely go down there tonight. But if we could go down there, that also means that it's completely possible for us to move up into 30,000 tonight. Are there any questions? Have I just thoroughly confused everybody? Marco, are you still here? You know, this is the nature of the business. You know, I mean, when I got into the business, it was later Larry Williams talking about I trade them for a while through Oak Trading. Oh my goodness, what are they called? This is what happens when you get gray hair. Thoughts just kind of remove themselves from your mind and you forget. Um, heating oil and gasoline, for example, spread trading, right? So I learned spreads and options from Larry Williams. His daughter is Michelle Williams, the actress, and that's where I started. My first trade was in 98 in orange juice, and I took that trade and went in and started day trading pork bellies. And I was trading pork bellies because, well, the minis weren't even around yet, and the micros definitely weren't around yet. There was no currencies to trade or anything else. We had the main index. We called it SPOO, this S&P 500 at 250 points, and it was still traded in the pit. It wasn't electronic yet. I was trading back with the dinosaurs roamed the world, man. And so, yeah, and it took me a long time to get away from the technical indicators and moving directly into price action and how to read the language of the charts, which is price action. And what's happening here? We are starting to break up and move into these highs. Let's get this chart up and let's watch this, because we are getting very, very close to closing outside of this range. What happens if we close outside of this range? You get a possible trend to the upside. I'm not going to just trade the breakout. We're going to be trading expecting a breakout, and we're going to be looking at the strength of the breakout. We determine the strength of the breakout by where the bar closed. And so when people talk about wicks, right, we can say, okay, well, why are wicks important? Wicks are important because of this. When price closes at its high or near its high, okay, it means that buyers or sellers, and there's just not a lot of sell bars in here, were aggressively entering into that market, and they aggressively stayed in that market until the close. Okay, that's strong direction, no trading, and it's telling us that that direction can continue. When we get wicks, what it's saying is market came down, and then buyers stepped in, sellers stepped away, price rejected the selling direction and moved higher. And this is where we see rejection. And understanding rejection is to be able to understand potential reversals. What's the problem with reversals? Trying to trade reversals in a trend is going to do nothing but destroy your account. But if we trade reversals in balance, understanding what balance means and trading what other traders call choppy, we're able to still make revenue and decent trades within the chop, as long as there's room for potential profits. If there's not enough room for potential profits, then we're just going to get chopped up with everybody else. But most individuals, what they'll do is they'll wait for confirmation in price, and they'll be trying to buy up here, waiting for that confirmation. What I'm saying is understand where your rejection areas are, being able to understand rejection in price, and now you want to enter down in here. So if you're entering long, you're entering down in here. You're not entering up here after confirmation. Confirmation does nothing but kill your account, because by the time confirmation happens, this move, once you get confirmation and you break this high, is already done. Now there's not enough for potential profits before the market's already reversing against your position. And then it gets down into an area where it hits your stop, and now you're out of the market and you're wondering why. And you're wondering why you have expenses and you're not making money, because you're waiting for that confirmation. You're waiting for that confirmation. What you want to be able to do is read the language of the market and anticipate what the market can do. Trade with the anticipation. Plan, anticipate, confirm, execute. Pace. You want to pace yourself in the markets because you want to plan, you want to anticipate, you want to confirm, and you want to execute. And what is confirmation? What is the confirmation? The confirmation is that price action came down, right? Traded back up into the area of rejection, and there's your entry. Your entry is up here at a higher high where there's not enough room now for potential profits. Your area is down here close to where this bar closed, if not a little bit lower, depending on how much confirmation you want. And that depends on you as a trader. We're all different. We're all different. But the only people that I have been able to, that I have watched and witnessed and know for a fact that they are actual consistently profitable traders, they're the ones that understand the auction process. They're the ones that understand order flow. They're the ones that understand these things. There is nobody that I know of that has a technical indicator on the chart or utilize any form of technical analysis that's not price action or order flow that stays consistently profitable. There are times where they can become profitable, but think about it. Every indicator works, but every indicator only works within the market condition that they were created in or that they were used for. And once the market shifts condition, which it does all the time, sometimes multiple times a day, when they do that, when they shift, that's when it becomes, that's when the indicator breaks. And you still use the indicator after it's already broken, not understanding the condition it was built in to work in. And that's why technical analysis doesn't work. It's not that the indicators are broken. It's not that they don't work. It's that they were designed for a particular market condition, and that market condition has changed. And you didn't develop the technical indicator, and so you don't know what condition it works in. That and they're all fundamentally lagging. The only indicator that's not lagging is price. The only indicator that's not lagging. Every single other indicator out there is lagging. Even news is lagging in fundamentals. Why? Because a lot of times the news is already priced into the market before it even moves. If you don't think that CEOs of Wall Street and different places along those lines aren't using the Wall Street Journal or other types of news sources to talk to one another in code to let them know what's happening, you're crazy. I don't believe in all the conspiracy theories related to the markets and those type of things. But I was on the trading floor in one of the in a very top firm at one point in time that is no longer around. And I was on the 7th floor of a really tall building in a very big city. And that's what I did. And I know for a fact that they know things before the fundamental news comes out and positioning themselves in the context of that news. And so a lot of times the news is already priced into the market. And if you're trying to trade news, usually the volatility is so high that it becomes untradeable. And that's the difference between volatility and momentum. Momentum is faster price action that's tradable. Volatility is a bar that just opens, moves again, and you can't even get into it because it's moving too fast. That's the difference between volatility and momentum. And very few people even come to that realization, that recognition. I learned that during the flash crash of 2010. Trading that was fun. I got out way early. I only was up like 60 points when the market crashed to like 1,200. We went through 3 curbs that day. And the reason why I only had 60 points because it happened so fast that I was afraid that it was just immediately going to come against because that volatility was so thick. I just got out of the market. Now, if I would have trailed my stop, I could have had 500, 600, 700, 800 points in a S&P 500 E-mini, which would have been really nice. But I didn't. So, that's the story of the flash crash, but I still picked up like 3,000. My best trade ever was like $7,500 in one lot, just trading one contract. That was an interesting day. My best day was a little bit over $15,000 in a $15,000 account. Actually, just under $15,000 in a $15,000 account. The most contracts that I've ever traded at one time, 25 lots in the ES and 18 lots in the Russell. I was going to trade more in the Russell, but I started getting slippage at 18 or at 21, so I backed off to 18, and I never got slippage. Trading 18 lots, which is $1,800 a point at that point, $1,800 a point, yeah, $10 a tick. And I always traded size when I earned the size. I didn't just open up an account, a cash account, and say, okay, well, now I have, $200,000 in this account, and I'm going to turn around and trade 25 lots in the ES. I always started with, $10, $15, $20,000 in the account, then allow the trading revenue to build up in the account until I had enough to trade another contract, and another contract. Then pretty soon I'm trading 2, 3, 4, 5 lots, right? Instead of just the one lot that got me there. And then usually what I would do too is scale in and scale out a position. So sometimes I would enter 25 just in one position, depending on what was happening. But then other times, I would only do like 5, 10, 15 lots, depending on why I was entering the market, and then scaling into those positions, but then also scaling out of them as well. And sometimes I would scale out and then add back in, and scale out and add back in, and all sorts of stuff. That gets complicated. We're doing something very simple here. One lots, scaling out through, not scaling out, I'm sorry, getting stopped out. That's it. That's all I'm doing here. I'm really trying to make this very, very simple, showing you guys, hey, look, this is what we can be capable of when we learn how to read the language of the markets. And last night, terrible session for me, trying to trade the Asian session last night like I traded the New York session, and it doesn't work. So I'm coming into it completely different tonight. It'll be fun. You'll see. 802. Let's get the shorter time frame charts up. We already know what we're looking at in the mid time frames and the daily. So this is exactly what I mean, right? Here's your reversal. This is your reversal bar, right? The reversal bar is telling you, oh wow, we could be moving back into the other area of value. But we're so close to a possible trend. We don't want to call a top. What I'm looking for here is a possible close above this high, moving us back into a trending condition, a trending market condition. Okay. What would get me to not do that? Start getting bars that are closing near the lows, right? Coming down pretty hard, closing below this area in here, rejecting back into this area in here, and now I have the ability to go short. I want to give this market some time before it goes short, because I don't want to call these highs. What we've got rejection here, we have rejection here, okay? Price action, if we look at order flow, what's going on in this chart? We have price action came up, and look, when this came up, we had gap, no volume. Price action came right to that low volume, just like the volume profiles of low volume, rejected, and sellers came into the market here. How do we know sellers came into the market here? Because buyers didn't come back and defend and start making highs. Sellers came in, price action came down. That's simple. Don't even have to know anything more about order flow than what I just told you. If you grasp those two concepts of low volume and order flow, and then participation, directional participation, and then what breaks directional participation. And so right now the market's not trending. The market hasn't come down where sellers would anticipate for participation. Of what is the market doing right now? Trading in a tight range, trading in value, but the range is too tight for potential profits. And liquidity in the Asia session is too low to be able to try to scalp into these areas, just too gappy. And so this is the time where you need to sit on your hands. We've already determined that there's a market shift in this market tonight, that there's a possibility of a trend, or there's a possibility of a movement back down, and the market is basically in the middle of those two. What would you expect? If you were in a situation and you were like, well, I could do this, but I could do that as well, and I don't know which one I'm going to do, you're going to be acting a little bit erratic or not acting at all, and you're going to be waiting for some sort of signal of what to do, right? The market's doing the same thing. This is its state of confusion when it's in a tight range like this. And when the market's confused and it's speaking to me in a confused state, I listen and I stay out. I'm not playing. So how about the Dodgers? Anybody watch baseball? I don't watch sports. Not really ever been a sports guy. Any questions? Does anybody have any questions about anything that I've gone over tonight at all? Throw a lot of information at you. A lot of information. But hopefully it's information that you find useful in your trading career. And then, of course, in the psychology of the market too, which is the psychology of trading, which is stuff that's out there, the mindset stuff and those type of things. It's, I don't know, it is what it is, right? Do something completely different. Not because the other stuff is wrong, it's just I never found consistency with it until, I created my own stuff. Not because it's better, just works better for me. The price action is currently in its confused state, and I'm not doing anything right now. I am waiting patiently. It's like being a hunter, right? You're out in the field, 5 o'clock in the morning, the fog is out, it's dark, and you're just patiently waiting and silent. But I'm in a stream and I don't want to stay silent because I want you guys to talk to me. Man, say hi. Let me know that you're here. Let me know that you're alive. Give me something to talk about. I'm tired of talking about the markets, especially in this condition. Angel, yeah. Okay, so this is Sierra charts. Okay. And Sierra charts, I use Sierra charts because they're really, really good when it comes to order flow, market profile, all of those type of things. I designed this chart here. Let me see if I can blow it up for you. Are you on full screen or are you on vertical, Angel? Because that will give me a better idea of what I can do to show you this chart and how to set it up and those type of things. And I appreciate the question, by the way. It's a great question. So I do have the numbers here, and that gives me an indication of the actual orders, right? And this is also off of cumulative delta. So it's looking at the diagonal. Okay, beautiful, full screen. Okay, so you can see everything. Okay, you can see the numbers here. So what it's doing is it's taking the bid diagonally off of the offer, and it's taking the offer off of the bid. Okay, so it's telling you when it's red that the sellers were more aggressive, and when it's green the buyers are more aggressive, and then when it's white that it's pretty much neutral. But I condense it and most of the time just look at the histogram, and the histogram is telling me where the higher volume is in the areas, where the lower volume is in the areas, allowing me to be able to pick up rejection areas, and then acceptance. And then I trade accordingly in the order flow with that. And in Sierra charts, I'll show you. It's crazy what you can do with this. These are all of the things that you can do to change the way that the footprint charts look. And that's it's a number bar, right? It's a number bar chart is what it is. And the number bars is a footprint. I've used multiple kinds of footprints. This is my favorite because it's visual for me and I'm just able to visually see it. The red is telling me that there's more sellers. The green is telling me that there's more buyers, but then the orange and this little light right here, this is telling me where there's actually larger participation. Instead of it being red or green where it's like stop and go, it just, my eyes gravitate to that more because you'll find in, especially in the NASDAQ, those areas, price will be attracted to them where the higher volume is. And we will usually come back and test those areas. And those areas will become support and resistance throughout the night. Just like we're testing this little area right here, look where it stopped and immediately rejected right there off of that 32. The highest volume point in this area. Any other questions about that, Angel? You have any questions about how to read it? I don't want to insult your intelligence by any indication, or assume that I know something that, or I'm talking to you about something that maybe you don't know. So if you have anything else that you would like to discuss, let me know. Yeah, it does. And just out of curiosity, what are you looking at order flow to bring to your trading? What do you anticipate order flow will help you with? And I can scrunch it up like this too and really be able to see the histograms, right? I mean, look at that. Here's something, right? This is why I always find interesting. Okay. See this low right here and the rejection and guys, seriously, right? If you're on TikTok, I don't want to say anything, but if you guys are on TikTok, please come over to the Purple app or YouTube and you're going to be able to see exactly what it is that I'm talking about. So if you're interested in order flow, let me know. But see this rejection right down here, right? What we did is when we came down here, we created this rejection. But when we came down, we had all of this high volume down here. All of this high volume. That's not rejection. We've got some acceptance down at this low. What should that be telling us? Well, we could absolutely come back and retest this area. And then what is price telling us? Wicks, 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 wicks. Exactly. Yeah. Angel, you got it. Absolutely. And when you can confirm rejection, it becomes much easier to trade ranges and balance. And then to understand changing market conditions, right? What's the changing market condition? Going from a range, right, into a trend. When you can read those two differences, then you adjust how you're reading order flow based upon the condition that the market is in. Now you're adjusting to the market condition and the language it's telling you because you're able to speak the language because you understand the auction. If you can put those two things together, I'm telling you, you're going to find profitability in the market. And then the other thing is too, right? The other thing that this tells you, if these were really sellers down here, we see this red, right? If they're really sellers down there, wouldn't you expect price action to continue going? And what do I mean by actual sellers? I'm talking about market orders, market-driven orders. Market orders are the only ones that drive the markets because they're constantly either hitting the bid or lifting the offer, right? The fact that we're coming down here, these could be limit orders that are coming off, right? That are not market-driven orders that didn't drive price lower. Which is another sign of potential rejection as well. Another way of reading order flow. You just have to be able to figure out how to read it based upon the conditions of the market. That's why I match order flow with auction market theory, because it gives me the language, how I should be reading this and interpreting it. And right now, I'm not in trades because we're in a place where the market is confused. The market's telling us that it's confused. Why is it confused? Because it can do one of two things up here. Shift into a trend or possibly move back into value. And I'm giving it time to develop. Tell me what it's doing before I start entering the markets. Any questions? Any questions at all? And if I'm speaking, over your current understanding, let me know and I can break that down for you a bit more. And I don't know if you were here earlier or not, but my higher time frame right in here, this is my 30-minute, this is my developing value area that I drew. The area charts allows you to draw those as well. So you can take the areas of the breakouts, right? And you can see your area of balance, your areas of false breakouts, moving back into value. And then you have your volume profiles as well that you can pinpoint your areas where you're anticipating where previous rejection has once taken place. And then you can trade around the area of value. And this is what's going on, right? Trading higher lows in value above VPOC, and then comes back in, closes back above value area high, showing signs of a possible trend. This is what I'm talking about, a possible change in market condition to exploratory highs, all-time highs, testing all-time highs. And so I want to be very careful in my trading tonight because I don't want to just come in, see, oh, wow, look, I have rejection up here. It's time to short. The market isn't telling us that it's possibly time to short. It's telling us that it's confused, trading in a tight range because it doesn't know if it wants to break out or if it wants to go down, because nobody right now is participating in a strong reactionary sense. In other words, we're not extending the range. And until we do, I'm sitting on my hands because the range is too tight in order to trade. You're welcome, and thank you for the question. If you have other questions, please, please, please let me know. I don't have all the answers by any stretch of the imagination. I only know about the markets about what I know, right? And if I don't know something, I will absolutely, absolutely tell you. But yeah. Marissa, what is going on? Anything fun and exciting? Oh, she gave me a like. I appreciate you. Do you have wings tonight? That's all I'm doing. You can tell I'm not trading right now. It's not in this market condition. Are you kidding me? Ugh. I'm waiting for it to do something. Roasted taters. Nice. Nice. The high-end meal right there, if I've ever heard of one. Grass-fed beef and potatoes. This is why, they're all linebackers. Oh, good times, good times. Any questions, guys? This is the best time to ask questions because I'm not trading. And if there's any topics, I mean, I am trading, but there's nothing to trade. And if there's any topics that you guys have that you want to discuss or anything else, then bring it on. Let's go. Let's go. Exactly, Angel. For those of you on TikTok, I feel you there. I've been cooked before in this type of situation. You'd think it would reject at this high, and just it rips your face off. Being spur patient. And Angel, you're 100% correct, right, guys? I did so well in trading from 2008 to 2016. Because the markets in that time period was pretty much rotating. Okay. And then all of a sudden they started trending. And I found myself chopping my account over and over and over again because I'm constantly trying to fade the trend because I didn't understand how to trade a trend. Because I was really good at trading value, really good at trading these ranges. Oh, it was so much fun. It was great trading. And then the trend came and I did not figure out how to trade a trend. Would not figure it out because I'm constantly looking for pullbacks and I'm constantly looking for rejection. Where do you find rejection in a trend? Because there's only acceptance. And then we get into all-time highs and exploratory highs, and I don't have a volume profile anymore. I'm like, oh, I don't even know what to do. So I did. I stepped away from trading for a while in 2019. Then 2020 happened. The volatility was so high you couldn't even react to the market because it's just jumping around all over the place. I digress. And Angel, what I learned how to do was read the shift. And once I learned how to read the shift, the epiphany happened and it all clicked. You know, you're finding that you get chopped up, and the market rips you in your face because you're trying to trade the times of the market shift in your rejection methodology. Am I correct there, or did I miss what you're actually doing? And I had to understand how to read the market shifts. And the moment that I did, it all clicked. And then I realized, oh my God, and the trend, I don't try to trade rejection. I don't try to trade reversals. Exactly. Yeah. I don't try to trade rejection. I don't try to trade reversals in these times of these areas of shifts. You know what I'm waiting for? I'm waiting for a breakout. I'm waiting for a pullback, and I'm waiting for momentum. And I'm going to go in the direction of momentum. I'm going to ride that freaking thing until it's done. I'm going to ride it like a freaking bull right out of the thing. And I'm going for 16 seconds. Screw this 8-second stuff. That's what I'm doing. I'm trading the momentum. You know what I tried to do last night, though, Angel? I tried to trade momentum for the New York session and the Asian session. That's how much of an idiot I am sometimes, right? Because old habits don't die. They always come back. And I tried to trade momentum last night in the Asian session in a non-trending market condition when it's trading in value and balance, which it normally does in the Asian session. And I absolutely 100% needed to chill out, and I couldn't figure it out. Ridiculous. I finally did figure it out, and I started having some revenue trades, and then the trend started, and I was able to catch it. But that's why tonight I'm like, no, absolutely not making the same mistake twice. I am not going to try to short these highs. I'm not going to try to do anything else. I'm waiting until either momentum comes in or gives me indication that it's now time to move back into value. And being able to read those shifts is the way that you read the markets. Now we're starting to get a breakout here. But see, here's the other mistake that people will make, right? Now they want to get in because there's momentum and they see it and they just want to buy the market right now. Oh, no. Wait. Because what we're going to get a pullback. And once we get the pullback, now we get to go back into order flow. We get to identify the rejection where we anticipate the pullback to happen, right? Before we even, exactly. But before we do any of that, we have to confirm, is this a breakout? Is this a breakout or is it confirmation? Because the breakouts are going to happen on closes, and those closes need to be at the high of the bar or within the top 1/3. Because if not, there's potential rejection to the downside. But because we're at these highs, we don't want to just take the short and just jump in. We want to wait for confirmation. We want to wait for another close below a key area, look for a pullback, and pop back into the downside, and looking for momentum to come in. Patience, my friend. Patience. Hopefully we get the setup tonight and I can show you. And then the other thing you have to be careful of is false breakouts and false directionary moves. That's where you're going to take your expenses in this in these types of market shifts. If we're not in an area of market shift, what's going to happen? We get a rejection in value, right? And then it's just going to go. And we're trading with the momentum and we're trading with the direction of the value, right? We're not in a market shift. The market's already in a balanced market condition. We're just trading it and having a good time. Marissa, are your ears leaking yet? Are you still here? You just like, what is he talking about? Or did you leave because I gave you a headache? And so Angel, that's the whole key. And yeah, we broke out, right? And those individuals that saw that and were like, oh wow, momentum, I'm just gonna hop in, boom. You've already been stopped out. And you're wondering why and what happened. And then those individuals that are looking for the rejection, they're like, oh wow, that candle is so bearish. I'm getting in. And now you're waiting because the momentum's not there and you're wondering what's going on. I hope that helps. And that's just water. It's not anything else, nothing fun, just water. hunters. We're hunters, Angel. We're hunters in the field. We're hiding in the fog. We're just waiting. We're waiting, we're waiting, we're waiting for a chance to pounce. It hasn't occurred yet. We're right back in the tight range that we were in before, even though it looks like we had a potential breakout. That's a false breakout. We don't want to get caught up in false signals. We want to wait for the good signals. And I'd be playing music right now, but I'm multi-streaming. There's platforms that frown upon that. And I tried to put Pretzel on last night. I mean, God, I don't know if you guys have ever listened to Pretzel before, but I was like, no, this isn't music. Yeah, perfect, Angel. Beautiful. You know, I'm honestly absolutely 100% proud of you for being patient and waiting, because the signal will come. The signal will come. And the more patient you are, the more you're going to trust the signal and yourself when you execute. And the more you trust yourself, oh man, when trust clicks, because you understand and you know what's going on and your actions are aligned to it, and there is not a better joy or satisfaction than that. That is absolute 100% fulfillment, because you're fulfilled in your own personal self-trust. This is why I trade. It's the only place where I can get that feeling at a moment's notice, because I understand what I'm seeing. My actions are aligned to it. Man, I took 17 expense trades last night trying to trade freaking momentum in the Asian markets during a very tight rotational balanced area. I was trying to trade it like I trade the New York session. I'm kind of embarrassed saying that, right? I really am. I took 17 expense trades in a row. And I still had that level of fulfillment because I trusted myself to understand the market enough that I could trade out of it. I was down 57 points last night, almost 60 points. I was up 189 points in the NASDAQ, trading a one lot at the US session yesterday. Today I'm up 89.75 points. So yeah, patience 100% pays off. 100% pays off. And I'm not saying these numbers to brag or anything else. I take my expense days. I had an expense day yesterday in the freaking Asian session, right? And yet I'm still here. And I'm here, not worked up, not emotional, not worried about the past expenses or anything else. I'm right here, right now in this present moment, ready to trade this market like nothing ever happened. Trust myself, because I understand what the market is doing. I know my prey. That's the key. And how many traders can you say actually knows your prey? Knows their prey, knows it, knows what they're going to do. Is able to put, their hunting stand up in the tree because they know how their prey is going to react. They know it's going to draw them in. They know how not to scare them away. They know when to anticipate their shot. They know how to plan, anticipate, confirm, execute. And by the time you've gone through that process and you understand everything that you're doing in that, when it comes time to execute, you're not executing because you're questioning, you're wondering, you're thinking, oh, wow, is this going to go? Oh, no, you trust. And now it's not about the results anymore. To trust in yourself to execute your plan, what you anticipate, what you confirm. And for me, there's nothing better, no better feeling in life whatsoever. Trade this without any form of revenue at all day long, because of that sensation. When it all comes together, it just clicks. You have that self-trust. What I trade for. We're still trading in our nice little tight range here. Tried to break out, didn't. Looked really good there for a second. Looked really good. It was really enticing. The market will do that. It will entice you. Oh, like a white stag or something along those lines, right? Something just right there. It catches your eye. It's beautiful. You're like, yes. and then it speaks. And it doesn't sound like what it looks like. And then we have it. Then we have issues, right? Especially if we went out and tried to grab it. Any other questions, Angel? Any other things you would like to discuss? I'm just jammering, yapping. Just yapping. I don't want to be here with one of those, I don't want to be one of those streamers where I'm just sitting here and just. And the people come in, it's like, well, what are they doing? What are they talking about? Nah. Sit here and talk to myself all the time. Crazy. Whatever. Voices in my head. But it's probably going to be an extremely slow night. An extremely, extremely slow night of just sitting on our hands and waiting. But hopefully, here's the good part. Hopefully, markets stay in this sideways range all night. That when we get up in the morning, the New York session starts. Now we can sit around and play ball because now the market's ready to break out. And hopefully the move doesn't happen in the overnights. Because then we have a gap to contend with. But even then, though, we need to kind of expect the gap to be filled and those type of things with some pretty high levels of volatility. And then you can trade the momentum. I don't know if you were here for that discussion or not, but there's a huge difference between momentum and volatility. Volatility just moves, right? Within one bar and just moves really fast. You can't trade it. It's not tradable. Momentum is faster movement, tradable movement. Why we can trade momentum. When it trends, trade momentum. When it's not trending, trade balance, trade value. Find your areas outside of the ranges, look for rejection, and trade into it. Trade into the area of value. And if trading doesn't become boring over time, you're doing something wrong. Because trading should be boring. Because if you're constantly, getting that fix and you're not bored, there's an issue there. And even here, a little bit too much of wicks, especially in this bar. Look for a possible momentum to move into this. At the same time, why am I not into this position? Not really enough potential profits in here. I mean, you get an entry here around the 80s, right? 85. What do you have up here for potential profits? 90s or so. Now we're getting something. Now let's see if we can get a close above here. Close at the high of this bar. See what happens. Closed in the top 1/3. Didn't close above this range. We could be rejecting. I'm still waiting. Still being patient. Right? Because we haven't broke out of the range. Not a confirmed. Remember, pace, plan, anticipate, confirm. We haven't confirmed the breakout yet. Don't anticipate a breakout. Confirm the breakout and execute around the confirmation. Because if you don't, and something shifts in your mindset, you get emotional, now your subconscious your subconscious patterns and habits are going to be in control of perception. The moment that happens, you start seeing things in the charts that aren't always there. Because you want to be in, you don't want to miss out on the move. You have the fear of missing out or revenge trading or whatever it might be, and it's going to guide your entries, not your anticipation. Anticipation comes from consciousness. All of that other stuff comes from subconscious processes. Two completely different things. We want to trade conscious intention controlling action, not subconscious processes controlling action. Because subconscious processes, it's not the one anticipating, but it becomes the one that's confirming. And it doesn't even know what the plan is. So what is it confirming? What you've always done in the past. And if you always do what you've done in the past, you're always going to get the same results you've always got. And if you're not a consistently profitable trader, your patterns are not aligned to consistently profitable trading. You have to separate from them. You can't fix them. You can't change them. You can't create a new mindset. Not what this is about. You got to separate from them. When you can learn to separate from your subconscious processes, conscious intention comes online. And now it controls anticipation. So you consciously firm inside bar, confusion, more confusion. This right here is just telling me, step back. Because the market doesn't know what it wants to do. If the market doesn't know what it wants to do, it's confused. And I know myself, when I'm in a confused state, I don't even want to be around myself, let alone anybody else, or make decisions. Market's the same way. Can it move? Sure. Is it moving in a way where I can anticipate what it's going to do next? Absolutely not. Just going tick by tick, and I don't know what the next tick is going to be. Never know what the next tick is going to be. Next tick is going to be up. Nope, it was down. Next tick is going to be down. So it's down. Down? Nope. Not even like flipping a coin. You never know what the next tick is going to be. You never know what the next tick is going to be. Why trading is so difficult. Because you're trading in an environment that's 100% complete unknown. And it triggers, and the unknown triggers the subconscious processes. Hey, I really appreciate everybody being here tonight and the conversations and the questions and the comments and stuff. You guys are awesome. I really, really do absolutely 100% appreciate everybody being here. And now, right, we broke out of the upside a little bit, but now we have rejection. Right? Rejection of what? Go back into the range? Great. I mean, but what range are we talking about? This little range right in here? Yep, that's where the rejection took us. Thank you so much. Appreciate you. Any other questions? Oh, you know what? I hope that's not too loud for anybody. Did anybody hear the clicking on my keyboard? Sorry, I was answering a question for somebody else. Yeah, it's boring, but you know what? It's better than being in the market right now and being like, why isn't it going anywhere? uh all right. Wow, look, who would have thought? Another inside bar showing indecision and confusion in the market. So, it's not like I'm sitting on my hands because I don't know what to do. No, I'm just sitting on my hands because there's nothing to do. You know what? We're going to do this. Let's do this. I don't have anything else to do. So let's do this. We're going to go and we're going to look at order flow. Can you guys see that? Yeah, can you? You see it? Okay. All right. Let's do this. Blow this up a little bit. Big. There we go. All right. So what's going on here? We just made a little bit of a lower low, right? So lower low, we do look like we potentially have some sellers in here. But if these are sellers, if these are true sellers, why is price here not extending? Why did we reject just a couple ticks below this low? So now we have potential resistance, potential support, 80, 84. If buyers are strong, we're going to get above the 84. If they're not, they're weak, we're going to see selling, and selling needs to get below the 80s. Well, selling can't even get below 80.75 right now. And there we go, boom, right? So what we did was we just extended the low a little bit. Buyers immediately stepped in. If these are really buyers, we should be coming back in above the 80, 82 area, but we're not. We're trading a little bit lower right now. We should be coming back up, test here into the 80s and a halves, where where support once was, and be looking at that as potential resistance. We're trading lower, high volume now. Expected anticipation for downward price action a little bit farther, more downward price action, retest the high volume, right? Should come back and retest the 76 here at some point in time as well, because that's where rejection is. Okay, very low volume, fill in the profile a little bit, see if sellers are still there. We come back up into the 78, like just below the 78, so 77 and 3/4. This is where support once was in the market. This should act as resistance. If this is really still resistance, we're going to get back below the high volume and start making lows again, because sellers should be stepping into the market. If it's not, this resistance is going to be coming into support. We're going to cycle back up into the 82s. There was a 79, 75, immediately came down. Sellers aren't in this market yet. We haven't rotated back below this high volume. Now we have resistance around the 79, 75, and we have support here at the 76. Sellers get aggressive, right through the 76 and come down and start making lows, or do we come back over into the 79, 75? If we don't make these lows, we're going to come back and we're going to test higher prices. So which one is it? Testing higher prices. Do we get back into the 79, 75? There it goes. Boom. Do we feel it? Nope. Fade right back down again, right back into 79, 75, then the 78, and then 79, 75. We're going to break the 79, 75. We're going to go back and retest the other side of resistance. Why? Because we're not breaking down and selling on lower prices. We're going to test buyers and see if buyers are aggressive above the 79, 75. Sellers come in and still turn this market down before all that happens? Sure. But if we don't break these lows, the 79.75 is going to be tested, because we are going to have to test for higher prices to see if buyers are willing to participate at those higher prices. It's got to happen. Or sellers defend the higher prices. And if sellers are defending the higher prices, then we're going to go back, and that's where lower lows are made. There we go, 79.75 all the way back up to 81. And then look, the selling pressure comes right back down into the support of 79, right? Sellers defended those higher prices by bringing the offer back down, hitting the bid and bringing price back down again. But where did they bring price back down to? This area of support. So our rotation now is around the 81, 82 area and this 77 area. And there we go. That's how we read order flow. That we can use this and utilize this information to determine rejection at key areas and key points that we find that we want to do business around. That's part of the plan. And we use this once we have those areas. And so we can turn around and say, okay, we're just going to create arbitrary areas here. Our arbitrary areas here are going to be the 70, and it's going to be up here at the highs of the 600s. So is there anything interesting in order flow around the 600s? Oh, that's rude. Grab the wrong chart there. Because I have to bring this over for the TikTok people. Okay, so what we have is price actions getting ready to make higher highs. And we have the 600 areas, right? This is an area we're anticipating possible resistance. So I'm anticipating this 50, this 98 area to be tested. And if this gets tested on rejection, there could be reasons to be shorting off of this area if this is a higher time frame area. If you want to scalp, you can sell off of this rejection as well. Okay. One, we have to get there first, right? Two, remember, when we're getting there, buyers are in control of the market. So we want to see sellers step in, create a level of resistance above us, create a level of support, see the resistance tested, see the support break, and that signals the entry, because now we have a confirmation that rejection has occurred because the auction fulfilled itself. And you saw the fulfillment of the auction, which means you can confirm the auction, which means that you can confidently execute around it because you trust what the market is telling you. Let's see if it gets up there and see what happens. Just like this was one of the areas of rejection, just like this was. We've already tested it and we created the auction around it. What did the auction tell us? That prices were being accepted higher. This auction right here broke. This is why I don't scalp off of a low time frame like this. You get a lot of inconclusive signals when it's not an area off of a higher time frame chart. It's an area off of a lower time frame chart because your areas are not as strong. We have a resistance here around the 88s, right? This high volume around the 88s. And then we have, let's see where support comes in at. There's your support a little bit right there of 84. We're going to cycle down into the 83s. See if we test down here into the 81s. 83s. Okay, we're going to move up higher, and our buyer is going to accept higher prices, or are they going to reject them? And the sellers are going to come down and test the 81s. This is the auction process. This is what we're constantly analyzing in the context of footprint charts and reading footprints. And each one of these ticks here can tell you to, oh, wow, I should probably do this. This is why you want to use them as areas of rejection. You don't get caught up in all the noise that footprints can represent. But they're a great tool for confirming rejection. And just for this one, I'm going to do this real quick. Where is it? Man, tired. I'm not even reading things very quickly. Here we go. Now our chart looks just like the other one. And so here we rejected off of this already. And so because we rejected here, now we can look at, okay, higher high. Sellers here, higher high. But wait a second. Okay. If these were higher highs, why are we making highs on lower volume? Why are we making highs on lower volume? The only reason why we'd be making highs on lower volume is because we're testing to see if anybody wants to participate up here. But it's lower volume from the previous high. And it's lower volume from over here. Buyers aren't bringing this up. We're testing it to see if buyers facilitate trade up there, and they don't. And what happens? They start facilitating trades at lower prices. What is that telling us? Sellers are currently controlling this market. That's all it's telling us. And if sellers are controlling the markets, what should we start seeing? Lower lows. We're seeing lower lows on developing higher volume. I'm anticipating these lows to break now. These lows should break at least 1 or 2 ticks. Boom, there you go. There's 4 ticks lower. And then what happens? Price action comes back up where support once was, which now becomes resistance, and we move into the low volume. The low volume node should act as a place of rejection because it's where trade didn't facilitate before. And if that's an area of rejection, we may be anticipating the lows to be tested. Now we test back into here, down a little bit more, see if we can get through this area of support, the ones where sellers were aggressive. Anticipate this area of 79 to be tested. If sellers are strong, we're going to go right back down and make lows. Reject out of this area and make lows. See? Rejection. Sellers are strong. We're going to make lows now. And it should happen pretty quickly. And there's your sellers. Now we have the higher volume, right? But we're only able to make a few ticks down. We're not able to make a lot of ticks. Now what am I anticipating? I'm anticipating us to test higher prices now, to test and see if buyers buy this, because sellers kind of rejected this, right? I mean, if this was really selling pressure, why didn't we make higher lows when we have these amounts of contracts being taken off down at the lows? And there's your buyers. Now let's see if the buyers are strong enough to break the high. There you go. More contracts, less buying, less price movement. Not less buying, but less price movement. Price action turns around, rejects the highs, comes in to where support once was, trades below it. Now we should be anticipating the lows to be tested. If sellers are aggressive, what are we doing instead? Trading right back into balance. What's balance? This little area right here, your bell curve. There's your balance. Telling us as a non-directional market. Now we just hit more contracts here. High level of volume. And so this is a high level of volume. What are we anticipating right now? We're anticipating this market to break out on one side or the other at the moment. And so let's see what happens. Let's see how price facilitates trade on this bar. Testing the high volume. If sellers are in control, we should be breaking these lows here pretty quickly because of the higher volume that's coming into the market right now. This is directional volume. We should see these highs or these lows break. And right now, trading below this directional volume, we should be anticipating these lows to break. Boom. Breaking on higher volume and anticipating lower lows right now. And yeah, you can trade this. Absolutely. I don't, because I'm not technically a scalper. My favorite trades are trades that I initially take kind of as a scalp that I trade to the other side of value. This is where I can get 100, 200 point moves in the NASDAQ. This is why I love the NASDAQ, because it's very directional at times, where the ES is much more rotational. And because it's much more rotational, you don't get as big of moves. And it's harder to manage risk in the bigger moves, where in this case here, let's say I am risking 10 points on a trade. I can get a 100-point directional move. 10-to-1 risk reward ratio. I can't get a 10-to-1 in risk reward ratio in the ES. It's just not possible in any market condition. The ES doesn't move in that type of sequence. Too rotational to do it. But the NASDAQ is much more directional. So there's your high volume or your low volume node up there around just above the 73s, just above the 74s, anticipating price action to try to test in there. And then looking at it possibly coming back down into the lows. But what do we have? We have a trade being facilitated at the higher price, trade being facilitated at the lower price from these two higher volumes. Anticipate the highs to be broken because it's facilitating trade higher. We're going to come up and test the highs and see if there's participation of buyers. If not, we're going to reject and we're going to come back and test lows. Facilitation of the higher prices at the highs, unable to make higher highs, very low volume up there, same amount of volume as it took to make the high itself. We don't break the highs, anticipating to come back down to test into the 72. So sellers are strong, we're going to pull back and we're going to break into the 69s and the 68s. So buyers are strong, we're going to start making higher highs. And this is just stuff that you can't see in a price bar. This is stuff that you can only see in order flow. And there's your higher high. And there we go, pop. I know a very, very good trader that's I will never be as good of a trader as this guy is. He is phenomenal. I had the luxury and the pleasure of watching him trade for 3 days. Man, this guy could take these order flow, and he would take this, right, and he would somehow figure out, to short this market down here or to up here, buy this market down here, and be able to read this order flow in the context. And he was doing it in the ES, and he was doing it in bonds, and he wasn't even an ES trader, he was a bonds trader. And this guy literally just took these footprint charts, broke them apart. Here's the highs. You're breaking the highs. You can't even make a higher high, higher volume. Is that buyers up there? No, because they're not making the higher high. Turn around and sell it right in here. And he would sell it. And he'd be like, oh man, it's coming down here. These low volumes in here. It's time to turn around and buy. And he'd be buying here and selling here. And this guy was constantly pulling money out of the ES on every other bar, if not every bar. And it was ridiculous to watch. And I've always tried to figure out exactly what he did, and I can't. And I can't do what he did. And so I don't use the footprints like he does. But man, that guy was phenomenal. Will never be as good of a trader as he was. And I said was because sadly I do not think he is with us anymore. The world lost a diamond in the rough that day when he passed. Like right here, I know for a fact he'd be selling. He'd be shorting this right now. Absolutely shorting it, looking for, 2, 3, 4 points, whatever it is he's looking for, even just ticks. And then turning around and reversing. Ridiculous. The guy was phenomenal. Well, everybody, I, first and foremost, want to say thank you for being here tonight, for your patronage, for watching. I hope I was able to help a little bit. And I truly appreciate everybody being here. And dropping the likes and the follows and everything else that you do. I truly do appreciate the support, and all those things help small channels like me and blah, 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 blah. We've always heard it. We've all heard it before, right? I just want to let you guys know that I truly, truly appreciate you being here. This market's just flat not doing anything. And I am going to be trading in the ES session tomorrow, and so I don't really need to do anything, and I'm up 89.79 points on the session from this morning's session, and there's just no reason to think about doing anything to give anything back. You are going to continue to trade the session. Be careful. We are in a tight ranged market condition right now. Tight ranges are very difficult to trade. Be patient. Wait for your breakouts. Wait for the confirmation of the breakout. Wait for confirmation of momentum. Anticipate. Don't wait for confirmation of the momentum. Anticipate the momentum and take the trade. And if it cycles back into the range, Wait for the next breakout. Wait for the next confirmation. Continue to be patient. Wait. If you don't, the market's going to chew you up. I don't want to see anybody get chewed up. Stay safe out there. Happy trading, happy hunting, and enjoy. And I'll catch you guys on Tuesday. Monday's a US holiday. I'm not trading that day, even the Asian session. Tomorrow's Friday, so we don't have an Asian session. And I'm not streaming yet in the New York session. Wait, before I go, so we're down here. I want to show you. See this? That's where I'm anticipating rejection to come into play. Right down here. I'm anticipating more price action to test this. When we get down into the 51 area, let's see. We're going to hunt. I'm not taking this trade because we're still in this range. But I want to watch this. I'm anticipating lower lows to come in. Break this low. And test this 51, 52 area. If we get test. There's 52. There is 52. Very low volume here. Very low volume. Be careful. Not yet. Want to see this trade facilitate a little bit. Here's the close of this bar. Tested the 52. Hold up. Wait. This bar, the only thing I don't like about this is this bar is closed at its low. So I'm anticipating a little bit more of a continuation here. Possibly even not just a test, but a break of these lows. There's your momentum that I was talking about. See? Pays to be patient. Pays dividends. Be patient. Now, do we get back here? Or are we going to close into this area? Because now we got to close below this range. This is exactly what I was looking for. Of course, as soon as I was ready to end the stream, I'm actually started getting something I can anticipate. So this close here is extremely important. It's an extremely important close for us right now. Pull back. Pulling back into the low volume. We get to pull back a little bit higher. Would like it. Okay, good. Lower volume on the high right there. We get through the support at 50. We get through the support at 50, or do we break the high? Now we have a close. We got a close below. And now we've got our retrace. 50 is our support. Do we get below the 50? Boom. There we go. Good. Hold on. Be patient. You don't want to sell here. Buyers are still in control of this bar. Even though we got through support, we don't want to sell here. We don't want to sell. Wait. Love the wick. Would like to see a little bit of a stronger wick on this bar when it closes. Wait for it. Wait. Retested right into this. Okay, good. Buyers stepping in. This is wait. Want to see that test high. We want to see the high. Test it again. Want to see the high. We want to see buyers stepping away from this market. We want to see sellers stepping in. Wait. We're stepping in a little bit. Unable to break the high. Bar. Get through the 52. Not in a way that facilitated trade yet. So we still wait. We haven't facilitated trade down there. Still wait. Still wait. Still wait. Sellers, facilitate trade into the 50s. We facilitate trade into the 50s. Or do we break the highs? One of those two things are going to happen. We're either going to break the high or we're going to facilitate trade in the 50s. Which one are we going to do? Boom. Facilitate trade in the 50s. Here we go. Here we go. Very, very, very tight stop. Why tight stop? Paying momentum to come into the market. Why? We have a breakout now. Breakout to the downside, pull back into the area. Now we want to see price action move down and break these lows, move back into facilitation of momentum to the downside. And we're going to be very aggressive on the stop. Very aggressive on the stop. Because if these highs break out, then if these highs break, price action can facilitate a little bit higher. We can get in at a higher price. Okay? I don't like this right now because we're staying at the lows and not selling through. Chances are that this price action is going to move higher. Okay? But we have a very, very tight stop. Very tight stop. We can actually bring this down a little bit more if we start to facilitate a little bit higher. Okay? If we get through this open of this bar right here, I don't really want to be in anymore. But I want to be above these highs just in case. Okay? Price action, if price action is weak, we should get through these levels here pretty quickly. And we're not. We're not getting through them quickly, which tells me that the market's not weak right now. We still have buyers supporting this. At least sellers aren't getting in strong. We could break these highs. If we break the highs, it gives us a chance to get back in at higher prices. Where would I like to break the highs at? Right here into this low volume node. We're into these high volume nodes right now. We're anticipating a little bit more rotation. Might be one of the reasons why the market isn't dropping very quickly right now. But we wait. We wait for it. We had our setup, close below the key bar, right? Close below, pull back, retrace. Now it's time to sell. Time to sell. Now let's see if sellers come back in and are aggressive. If not, this could be a false breakout. But we took our shot. We took our shot when the setup was there. That was good price. That was good order flow right there. That's good order flow in auction. Now anticipating a lower low. We get the lower low. We get the lower low. Not yet. Not yet. Do we get it? Right? Picked up a little bit. No buying pressure in here. Very, very low volume. Anticipating some volatility at some point in time too, because the volume in here is really low. What is volatility? Just quick price action. You can't, it's not even momentum. You can't trade it. Either you're in or you're out. It just moves too quickly. You can't anticipate it. You can't execute around it. We need a lower low here. If we don't get a lower low, this trade is over. But what I'm going to do is bleed out risk a little bit. I'm going to bleed out a little bit more risk because the price action is not doing what I've anticipated to do, which would be a momentum move here, a quick down, and it's not happening. If it's not doing the quick down, it's doing something else. And if it's doing something else, it's probably doing something rotational. Rotational is going to put us back into here, and I don't want to be risking anything else in the market when it could possibly do that. So be very aggressive on the stop. We need a lower low. I'm not hoping and praying for a lower low because I don't really care what this trade does. I have my plan. Close below this area, pull back, subsequent down, rejection at the highs, anticipating possible momentum coming in. But look at the buyer stepping in at the low. Do you see that? Do you see the buyer stepping in at the low of this bar? Are you over on the purple app? Are you on YouTube? Are you seeing this in the big screen? Were you able to see the order flow chart? See that rejection at that low? Not a good sign. And higher volume above the other higher volume, this thing is going to probably go up and break the highs. In fact, in anticipation of that, I'm going to bleed out a little bit more of the risk out of this trade. Not a lot more, just a little bit. Right above this close here. Because we get up here, I'm anticipating these highs to break out. There's no sense in taking the risk. No sense in taking the risk. I was in here at what, 550, and I got stopped out here at 55. And if we break through these lows, dissipates possible momentum, but I'm back in the market again. We come back up in here and show rejection, I can still get in. If we break this high here, I'm not interested. We're going back into rotation. Still haven't broke these highs yet. Did take an expense there because I was really aggressive on my stop because it wasn't doing what I wanted it to do. So I'm just flat out. And look, we just broke the highs. Been stopped out here with a worse, with a larger expense trade. And always get back in. Always get back in. Higher volume up here at the highs. See if that brings us right now into a higher high. If not, sellers a bit more aggressive. Don't want to just sell the signal right now. I want to wait for confirmation. Confirmation, confirmation, confirmation. Plan, anticipate, confirm, execute. We're in the confirmation stage right now. The plan is already set. Close below this area, right? Anticipate continuation to the downside, like we got here. And right? Anticipate. Confirm your area for entry. Right now, I want to see it get through here. Okay, look at that. Came right into the area I was looking at for possible rejection. We're seeing that rejection. But we haven't seen confirmation yet. The price is wanting to continue lower because right now we're making higher highs and higher lows. That's not a good indication for continuation to the downside. That's an indication to the continuation to the upside. Okay. So right now, price action is telling me, speaking the language, I want to go up. Okay. And I want to go short. So I don't want to go short when the market's still telling me that it wants to go up. So I sit on my hands and I wait. And I wait in the area where I want it to be. It is in the area where I want it to be. I'm hunting and I'm waiting. But it's finally an area where I want to do business. But it hasn't confirmed that I want to do business yet. I mean, do you guys see how small my risk was on this? I mean, 50 and a quarter, 54 and a quarter, 4 points, 4 points, and the stop would have hit all the way up here, up to 60. Even then, you're still only looking at a 9-point stop, 8 3/4. And the NASDAQ. I mean, seriously, who uses that kind of stop in the NASDAQ? Why can I do that? I'm anticipating, and planning, and confirming. I know what I want to see. I know what I should see. And when the market's not doing what I know I should see, I don't want to play anymore. And we're right back into value, right back into this nice little range. False breakout. We just broke the high. I'm no longer hunting this area. Took my shot. Took my shot. Confirmed. Did it stop me out? Yeah. Okay, great. 4 points. 4 points. $80. If you're trying to trade in a prop account at $80 expense trade, you're still golden. You're not going to blow up your account with that. And if you continue to trade around this in that context, when a trade does hit, you get that 20, 30, 40-point move, covers a lot of these expenses that you took a shot on, that you planned for, that you anticipated. Earn. Well, that was fun. On that note, I am going to leave the stream with 85.5 points between the two sessions. Was that 89 or 89 something? I don't know, 89.5, whatever it was. I'm not too concerned about it. 80 points is still 80 points. But I want to, again, thank everybody for being here. I really do appreciate the patronage and just you guys being around. It can be a lonely endeavor sometimes, and just having people to talk to is nice. So again, thank you guys very much for being here. I truly appreciate you. I hope that you got something out of it. I know I did. Every time I stream, there's something. I learned something. So thank you guys very much. And I look forward to seeing everybody on Tuesday. Have a great night. Enjoy. Oh, you know what? I'm so sorry, guys. I ended this, but it didn't end. I'm so sorry, guys. I ended this, but it didn't end.